For lesson 2.2, we're going to talk about the following things: the relationship between an accounting equation and a T account. We're going to talk about debit and credit for the first time. And then we're going to talk about the rules as far as the increased side and decreased side of an account. So as you're following along here, be sure that you're completing your guided notes. I'll be sure that we get in all the blanks filled in. And we should be through the first 2 pages after 2-1. So you might recognize this next slide. This is very similar to what we saw in number 1. Chapter 1, we have assets equal liabilities plus owner's equity. Assets are on the left side of the equation. Owner's equity and liabilities are on the right side. Also notice this T here. So we're going to talk about that often. So an account, we know what accounts are. We know that we had the cash account. We had the prepaid insurance account. Now we are going to be using something called a T account as a visual aid. So T accounts are just a visual aid in order to kind of visualize the left side and the right side of an account. So we are no longer going to have plus and minus like we did in chapter 1, where we purchased supplies with cash. So we would have added $200 to supplies, subtract $200 from cash. No more plus, minus. Now we're going to be thinking in terms of debit and credit. Okay? When you think of debit and credit, you might think of a debit card and a credit card, but that has nothing to do with what we're talking about. In accounting, debit simply means the left side of the account, and credit simply means the right side of the account. So on your guided notes here, we're going to have a couple changes. The total of all assets must equal the total of all liabilities and owner's equity. Okay, we learned that in chapter 1. Okay, so that's that first one. Transactions change the balance of accounts in the accounting equation. So accounts are affected every time you have a transaction. 2 accounts are affected for each transaction. First 2 bullet points. So when we're down here now, debit is the left and credit is the right. Debit and credit have nothing to do with debit cards and credit cards. Debit is the left side, credit is the right side. These can be abbreviated as DR and CR. So here we are, we're looking at that T account again. A T account simply just shows the left side, which is the debit side, and the right side, which is a credit side. So we've just kind of evolved from our accounting equation down here to our T account. We're going to think of everything in terms of debits and credits moving forward. No more plus or minus. So assets are on the left side of the accounting equation. So flip back here, left side of the T chart. They increase on the left. When we think of the left, we think of debit. Liabilities and owner's equity. Let's look back at our account here. Liabilities and owner's equity on the right side of the accounting equation. So they increase on the right, or the credit side. So when we say an asset increases on the left side, you could also say that the normal balance of an asset is a debit. You could say the normal balance of liability and owner's equity is a credit. So normal balance is the same thing as saying what side of the account an account is increased on. So that is what normal balance means. So if we go back here to our note guide, say normal balance. So assets are on the left side of the equation, so they increase with a debit. Fill that in there, meaning their normal balance is on the debit side. The opposite of the normal balance is the side that they decrease on. So they decrease on the opposite side, which is the credit. So for assets, we'd have debit, debit, credit. Liabilities, the next bullet point, liabilities and owner's equity are on the right side of the accounting equation. So they increase with a credit, meaning their normal balance is on the credit side. So increase and normal balance are the exact same thing. they decrease on the opposite side, which is the debit side. So this is a good visual that will help you fill out. It shows here that our assets are on the left side of the equation. They have a normal balance on the left side, or the debit side. On the right side of the accounting equation, we have liabilities and owner's equity. Liabilities increase with a credit. Owner's capital account, our owner's equity account, increases with a credit. So you should have enough to complete your note guide. Last thing you need to do is fill in this chart right here. Cash, so you would put a debit on the left, credit on the right for every single one of them. And then you're gonna circle for each account which side is their normal balance, aka which side does it increase. Okay, so you're gonna need to know, is it an asset, a liability, or an owner's equity? That is something that you're gonna have to know. That's called classifying an account. We have to know what those are. So that is section 2-1.